Welcome to Business and Finance. Today we are going to be looking at a lot of numbers as the 2022 report for what states have generated as their revenue internally is out. Also, we are going to be seeing what FAAC have allocated to federal government, state, and the local government, and also some companies, some banks precisely, are publishing their income and revenue generated before tax. We're going to be seeing that of the Guaranteed Trust Bank, and then other banks also like the First Bank Holdings have also published their income before tax. And these are the numbers we're going to be looking at on Business and Finance, alongside with the fiscal and monetary policies coming from the finance minister and also the president, and what to do concerning forex liquidity and to be able to sustain transaction supply and demand of the currency, as we're seeing that the forex crisis is lingering and even the free fall of the naira continues. I am Rachel Tanze. This is Echo Television International. Now we're going straight to what states have generated for the year 2022, and we will compare it to what states generated for 2021. Now these are statistics coming from the National Bureau of Statistics. Now we're looking at every state including the Federal Capital Territory. Now we're seeing that including the Federal Capital Territory, there is a 1.6% year-on-year growth in internally generated revenue to 1.92 trillion naira in 2022 from 1.89 trillion in 2022. Yes, the difference is slightly not that much. You wouldn't be able to tell it, but then we are seeing that is 1.6%. Then it means that there's something the states are doing, getting it right. Now we are going to look at precisely where these revenues were generated from, perhaps the way forward for these states to boost their revenue. Now we are seeing that according to the NBS, the 2022 IGR have been two major revenue sources, namely taxes and ministries, department and agencies revenue. So we are looking at MDAs. Now the Bureau says tax subcategories recorded in the period are pay as you earn. That's the PAYE, direct assessment, road tax, stamp duties, capital gain tax, withholding taxes, other taxes, and LGA revenue. So we are looking at what taxes have been able to generate for states, and for the 36 states including the FCT in general for 2022, we are looking at 1.92 trillion naira. Now, why the list three? We're looking at, according to the report, similar to what was recorded in 2022. The leading states in total IGR in 2022 were Lagos, Rivers, and the FCT. Now, let's look at what Lagos have. We're looking at 651 billion, 145 million, 633,000. Now for that is for Lagos State. Now Rivers is 172 billion, 823 million, 232,000. Now the FCT is 124 billion, 366 million, 774,000 naira respectively. Now these are the highest, where we can see Lagos at the top, followed by Rivers State, and then down to the Federal Capital Territory. Now while the least three performing states during the year were Kebbi, Taraba, and Yobe. Now Kebbi is having 9,146,249,000 naira. Then we're looking at Yobe State with 238 billion 110,000, and then we're looking at Yobe State with 10 billion 456 billion and then 776,000 respectively. So the states at the bottom are barely making 10 billion for a whole year. Now this is very low. Now we are seeing that the report said PAYE, that is the pay as you earn taxes, was the most contributing revenue sources in 2022, with a 67.62% share to the total tax generated revenues nationwide. Now, the Bureau said capital gains tax generated the least in 2022, with a 0.24% share to total tax revenue. Now, we are seeing that the report for Oyo, Lagos, and Jigawa State led with the highest LGA revenue reported during the year. So we are also seeing that there are local governments that are also generating a lot of revenue, even compared to the states that are at the bottom. Now, when we look at just revenue from taxes at 1.92 trillion naira, then imagine if other revenue were fully functional in this state. We're looking at states with solid minerals, we are looking at states that could boost the agricultural sectors, and we are looking at states that have vast raw materials that could be refined to finished goods and products, and yet we are seeing states not tapping into it and solely depending on tax revenue generated. Now, this is not bad per se, but then there's so much work that needs to be done at the state level, as we are seeing that despite this tax revenue, it is not enough to fend for this state. We are seeing the debt profile, internal debt profile, going high because states are lending, borrowing, and going in taking loans from the banks. And we have seen that recently, even for the palliative, the federal government is saying that states are going to pay back. So it means that there's need for more revenues to be generated at the state level, because despite these taxes generating significant amount of revenue, it is not enough for the state. We're also saying that the states are still depending on federal allocation, so more needs to be done. Now, we're saying that the CBN the federal government, of course, is expecting a $10 billion foreign exchange inflow in the weeks ahead. Now, this is statement coming. We are going to go through some of the statements coming from the finance minister. We are talking about Wale Edun here, and what he has to say concerning how, where, and when this $10 billion is going to flow into the exchange market. Now, in addition, from the supply of foreign exchange through NNPC, increased production, reduced expenditure from transactions such as forward sales. From our discussions with sovereign wealth funds that are ready to invest and provide advance alongside that investment, there is a line of sight of $10 billion worth of foreign exchange in the relatively near future, in weeks rather than months. Now, let's not forget that one of the challenge in the parallel market we have been having is the shortage of dollar. Now, if we're able to fix the supply, then perhaps we will be seeing that the free fall might stop at the parallel market and even at the INE window. Now, we are seeing that advances. Now, the federal government, the Ministry of Finance, are expecting advances from investors. Now, these advances from funds, from sovereign wealth funds and investors, are the inflows that is expected that won't take months, but in a couple of weeks, very short period of time, will be coming into the country. And this is the expectation, where the federal government is seeing that these advances or wealth funds coming from foreign investors could amount to $10 billion and will be able to help with the forest scarcity that we are going through at the moment. And the minister further said President Tinubu has signed 2 executive orders geared towards ensuring liquidity in the forex market. Now, liquidity describes the extent to which an asset can be bought and sold quickly and at a stable price and converted to cash. So we are looking at the stability of our naira here. The commodity here is our currency, and we are looking at its stability in the market. Now, we see that the minister further disclosed the President Tinubu had a meeting, signed 2 executive orders to support the currency market. According to him, the executive orders allow domestic issuance of instruments in foreign currency and all cash outside the banking system to be brought into the bank. So we can see that the previous monetary policy of reducing circulation of naira outside the banks is designed in a lot of ways to help with foreign exchange. So now we are seeing that in as much as that policy might look cold at this moment, the monetary policy, we see that it is very important that the CBN have majority of cash flowing in the banks than outside. So it means that there is a need for the government to wake up and see how to make sure cash flows go back into the bank. We're seeing that Naira redesign was one of the reasons, but we're seeing that Cardoso, the new CBN president, is thinking and considering that perhaps we will be shunning Naira redesign and just go on with our old notes, or they will coexist. But we are saying that for the foreign exchange to flow and for the inflow to be smooth, there is need for circulation of money to be more in the banks. Therefore, it looks like for the CBN to be able to achieve an inflow of foreign currency, then there is a need to stick with the monetary policy put by the past CBN governor concerning having majority of the currency in the CBN or flowing in banks, not cash outside. Now we're seeing that the market is illiquid at the moment. It is not functioning properly because there is no supply, and there are various reasons for that. The solution that the president has put on the table is that he has signed an executive order that effectively allows under forbearance all the cash that is in the domestic economy to legally come into the formal money supply. Yes, the formal money supply keeps meaning the central bank and then the flow within the banks. Now we are seeing that in line with all of these things put in place, the federal government wants to digitize foreign exchange transactions. Now these are all the policies that the federal government is putting in place. Now it's not all about the foreign exchange inflow coming in. Now it's also to be able to keep this cash within the formal institution. We are seeing that there's a need for foreign exchange transaction to be digitized. Now this simply means that we are going to be making use of the national identification number and also the BVN, that is the bank verification number. Now this follows the government plan to automate the foreign exchange market. Now, the government said automation and digitization of its foreign exchange market will ward off market speculators who exploit the loopholes in Nigeria's currency market. Now, the thing is that we have speculators in the foreign exchange market, of course, through the parallel market, the unofficial market, or the black market, as we know it, Bureau de Change, who speculate the free fall of the Naira and have been successfully predicting it rightly in the way that we are seeing that the currency, the Naira, has devalued as against the dollar significantly, and we are seeing the prices of goods in the market soaring high and high, and it feels like there's no solution. So by the time we have our digitized exchange, then we will be seeing that speculators will not be able to predict why, because now the flow of currency will be in the official institutions, and then also we will not be looking at cash, but rather now more of like a cashless way of banking, and therefore they might not be able to have that full power of predicting how high it will go. But then now this digital market and supply and demand that is happening within and inside the banks will be what will determine what the exchange rate is. Now, we are seeing that he also disclosed that the president signed 2 executive orders, which we have talked about it previously, concerning what to do to make sure that there is an inflow. Now, all of these things are things put in place by the government, by the president, together with the Ministry of Finance, together with the Central Bank of Nigeria, to see that there is a foreign exchange inflow, which at the long run, or even within the short run, we will see that the Naira will be gaining its value as against the dollar. Now, we are going to look into more numbers as we will see what the FAAC have given to the federal government, the state government, and the local government at the location for the month of September. Now, we are seeing that the Federation Account Allocation Committee has shared 903.48 billion naira for September. Now, the balance in the excess crude account was $475,754. A communique issued by the FAC in its October 2023 meeting indicated that the 903.480 billion naira total distributable revenue comprised distributable stationary revenue of 423.012 billion, distributable value added tax revenue of 282.666 billion naira. Now we have electronic money transfer levy revenue of 10.989 billion naira and exchange difference revenue of 186.813 billion. Now, from the Office of the Accountant General of the Federation, and also this coming from the FAAC in September 2023, we have the total revenue available at 1,594 billion naira. Now, the total deduction for the cost of collection were 54.426 billion naira. Total transfer and refunds were 347.857 billion, and savings were 289.000 billion. Now, gross stationary revenue was 1,014 billion 953 was received by September, which was higher than the previous month of August. Now, the gross revenue from the value added tax was 303.550 billion, which was lower than the 345.72 billion naira available in August 2022 by 2023 by 42.177 billion. Now, this communique stated that the 903.480 billion total distributable revenue, the federal government received 320.543 billion. The state government got 287.071 billion, and the local government council went home with 210.900 billion naira. So we are seeing that the revenue allocated from the FAAC has gone high compared to the previous month of August, and we are yet to see the report for October. I believe the report for October will come in November when everything have been tabled together and put together. But we are seeing that there is an increase, and of course we are seeing that the stationary revenue has gone high, and we are seeing that the value added tax have also gone high. Now we are seeing that the federal government have upheld FEC meeting, and we are seeing that there's new investment policies, tax policies, job policies, and then also forex policies. We've seen a few from the president that have signed 2 new urgent policies in place concerning flow and also what is expected and advance payment from foreign investors. Now we are seeing that the Fiscal Policy and Tax Reform Committee that is led by Taiwo Ayedele has given a report after they sat down to the president on what are the new policies to be taken. Now we're seeing that the committee made 20 recommendations covering diverse areas such as taxation, job creation, foreign exchange reform, ease of doing business, investment, temporary action to relieve pains of petrol subsidy. Now we've seen that there are over 200 taxes that have been brought down. Now we have a lot of debate back and forth concerning what it means for the economy, because we can see that a lot of revenue in Nigeria is being generated from tax. Now, if we're seeing that the government is dropping over 200 taxes on businesses and duties, then it means that, of course, tax revenue will go low. But this is so that there will be ease of doing business, as businesses are complaining of over 20 different taxes just for one business. We are seeing that from manufacturers, and we are seeing that from people who are into importation of whatever good in the country. Now, the president have seen taking the recommendation from the Federal Executive Council concerning monetary and fiscal policies, that it is very important for the government to bring down some of these duties and taxes just to make the economy business friendly, so that small scale medium businesses can thrive, and then also there will be more job created. And then we are seeing that, of course, we are still speculating that let the president bring the 2024 budget, but it will be coming soon by November. Just few days ahead, we will be seeing that in early November, the president is definitely going to bring out what is expected, what Nigerians are waiting for, because there is a budget proposal of 26.1 trillion naira. Now, it's not just about the budget, but then we're also seeing that the federal government is targeting 1.7 million barrel per day of oil production, and at $74 per barrel for the year 2024. Now, with this estimate, no wonder the federal government is giving such a budget, looking that oil will be able to fund some part of the budget. Now, we can also see what we are producing at the moment. Now, we are seeing that in a recent Federal Executive Council decision, overall the country plans to spend 26.01 trillion naira in the 2024 budget, and will, according to the minister, assume an oil price of $73.96 for its expenditure at an exchange rate of 700 naira per dollar. So we are looking at an increase in our production for oil to 1.7 million barrel per day. While oil prices currently stand at about $93 per barrel, Nigeria aims to significantly increase its oil production up to 1.7 million barrel per day. Now, the country's production rose by 14% in September to reach 1.346 million barrel per day compared to 1.181 million barrel in August, according to latest data. Now, added to the condensed state, however, Nigeria's total daily average production as of September was 1.57 million barrel per day, which is still below the target for 2024 and is a little bit above our quota from OPEC. Now, the implication is that if the contribution of condensed state to the national oil production is part of government calculation in assuming the 1.78 million barrel per day production target of 2024, the country will still have to add 210,000 barrels in daily production to reach the target, of course. And this is dwindling because the month before September, the average for the year so far is 1.3 million barrel. We managed to reach 1.57 million barrel in September, and then this is an estimate and it has to be consistent, 1.7 million barrel for 2024 for us to be able to have a 26.01 trillion naira budget. Now, we will see how the federal government pulls it off, but I believe that yes, if we are able to solve the issue of oil theft and be able to be accountable and increase our production, then yes, 1.7 million barrel per day for oil production is achievable in Nigeria. Now, to end the show, we'd just like to see what Guaranty Trust Bank have been able to make without before tax and profit before tax was deducted. Now, we are seeing that the Guaranteed Trust Holding Company PLC have reported profit before tax of 433.2 billion naira, representing an increase of 155.2% over 169.7 billion naira recorded in the same period in 2022. So we are looking at, in the third quarter of 2022, Guaranteed Trust Bank made 169.7 billion naira. Now we are seeing 1 year later having over 155.2% increase. That is massive. Now, this was disclosed in its unaudited consolidation and separate financial statement for the period ended September 30th, 2023, filed with the Nigerian Exchange Group and London Stock Exchange. Now, we are seeing in the period of the review, the group loan books grew by 17.7% from 1.89 trillion naira in December 2022 to 2.22 trillion naira in September 2023. So yes, we are seeing that Guaranteed Trust Holding Company is recording massive increase in revenue generated before tax, and such have been seen recorded throughout the year for First Bank Holding. We have seen same for Zenith Bank. We have seen same for Access Bank in the country. And this is how far we go on Business and Finance today. Keep a date with me next time. Goodbye.